Gold isn't just for jewelry. Its story stretches back thousands of years, woven into the fabric of civilizations. From ancient empires to modern economies, gold has always held a special place in our collective imagination. It's been used as currency, a symbol of power, and a measure of wealth across continents and cultures. Today, gold remains a global symbol of wealth and stability. Its unmistakable luster and rarity make it a prized possession, but its true value goes far beyond its physical beauty. The price of gold acts as a barometer for economic and political health worldwide. Investors, governments, and everyday people watch it closely because it often signals what's happening beneath the surface of the global economy. When uncertainty rises, whether from financial crises, wars, or political upheaval, so does gold. As people seek a safe store of value, it's a kind of financial insurance, a way to protect wealth when everything else feels shaky. Unlike paper money, which can be printed at will, gold is scarce and universally trusted. Its supply is limited, and it's recognized everywhere, making it a unique global asset that transcends borders and currencies. Major moves in gold's price often signal shifts in global confidence and risk. When gold surges, it's a sign that people are worried about the future, or that big changes are underway in the world economy. Understanding these shifts helps us decode world events and their impact on our finances. By watching gold, we can get early clues about inflation, currency swings, and even geopolitical tensions. In this video, we'll break down the recent surge in gold, exploring what's driving prices higher and what it means for investors and everyday people alike. We'll look at the US-EU tensions over Greenland, a region rich in resources and strategic importance, and how these geopolitical moves ripple through the gold market. We'll also examine the weakening US dollar and why a falling currency often pushes gold prices even higher as people look for safer places to store their wealth. We'll see how these powerful forces shape the price of gold and why it matters to everyone, not just Wall Street traders or big investors, but families, savers, and anyone concerned about their financial future. So let's dive into the story behind gold's new all-time high and discover what it reveals about the world we live in today. On January 21, 2026, gold shattered records, soaring to $4,178.30 an ounce. That's a 6% jump in just a week, a rare, dramatic move. U.S. gold futures also hit historic highs, signaling traders expect prices to stay elevated. This isn't a blip. It's a response to deepening global anxieties. Investors are fleeing riskier assets and piling into gold for safety. A single-day gain of over 2% in gold is huge, reflecting widespread uncertainty. The numbers aren't just statistics. They're a measure of global fear and gold's enduring appeal. This rally is a direct reaction to escalating geopolitical tensions. Let's look at what's driving this surge. The main trigger? Escalating US-EU tensions over Greenland. Once a quiet Arctic outpost, Greenland is now a strategic hotspot, rich in resources and military value. The US is asserting its interests, citing national security, while Europe pushes back, seeing this as a threat to their influence. This standoff between two economic giants is rattling global markets. Investors fear trade wars, tariffs, and a breakdown in international cooperation. The uncertainty is driving a rush to safe assets like gold. Greenland has become the spark igniting a global flight to safety. The icy island is now at the center of a high-stakes drama reflected in gold's price. In tense times, leaders' words can move markets, sometimes more than any economic report or data release. The world's financial systems are deeply interconnected, and a single statement from a powerful leader can send shockwaves across continents. Investors, traders, and analysts hang on every word, knowing that even a hint of uncertainty or aggression can trigger massive reactions in global markets. In recent days, a series of bold and unexpected statements from top officials have only fueled anxiety. leaving markets on edge and volatility at a high. President Trump's hardline stance on Greenland, including threats of new tariffs and a refusal to back down, signals to the world that compromise is off the table for now. His rhetoric has been uncompromising, making it clear that the U.S. is prepared to escalate tensions if necessary. Meanwhile, Europe, led by President Macron, is pushing back forcefully. European leaders have united in their resolve, vowing not to bow to U.S. pressure and emphasizing their commitment to defending their own economic interests. This public clash between major powers makes a quick resolution seem unlikely. The standoff is deepening investor fears as uncertainty about the future grows with each passing day. Even when central bankers and officials attempt to soften the rhetoric or reassure the public, their efforts have done little to calm the markets. The underlying tension remains, and volatility persists. The tough talk and escalating war of words have planted seeds of doubt, making investors even more cautious. Many are now questioning whether the situation could spiral further out of control. Every statement, every press release, and every offhand comment is now scrutinized for hidden clues. This constant analysis only amplifies the sense of instability and keeps everyone guessing about what might happen next. The escalating war of words is a powerful catalyst for the rush into gold. As uncertainty grows, investors are seeking out safe havens, and gold has become the asset of choice. Each new headline, each fresh round of tough talk, pushes gold prices even higher as investors scramble to protect their wealth in these unpredictable times. When uncertainty spikes in the financial markets, investors often react quickly, pulling their money out of assets that suddenly seem too risky. Stocks, currencies, and even real estate can become volatile, leaving people searching for a safer place to park their wealth. That's when they run to gold, the ultimate safe haven asset that has stood the test of time for centuries. Unlike stocks or bonds, gold's value isn't tied to the performance of any single government, company, or economy. It's recognized and valued all over the world, making it a truly global asset. This independence makes gold a reliable anchor during turbulent times, offering stability when other investments falter. The recent standoff in Greenland is a textbook example of the kind of geopolitical tension that sparks fear and uncertainty, prompting investors to seek out gold. In moments like these, investors become less concerned with chasing high returns and more focused on simply protecting what they already have. Preserving wealth becomes the top priority, and gold is seen as a fortress against financial storms. Gold's scarcity, its physical nature, and its independence from government policy or central bank decisions make it a trusted store of value, especially when paper currencies or digital assets seem vulnerable. Throughout history, in every major crisis, whether economic, political, or military, gold's reputation as a safe haven has only grown stronger. The current surge in gold buying is a direct result of this deep-rooted psychological and financial instinct to seek safety when the world feels unpredictable. As fear and uncertainty spread, demand for gold rises sharply, with more people and institutions seeking to add it to their portfolios. This rush to safety sends gold prices soaring to new heights, reinforcing its status as the world's most trusted safe haven. Another key factor: the weakening U.S. dollar. Gold is priced in dollars, so when the dollar falls, gold becomes more expensive in dollar terms. Recently, the dollar hit a 2-week low, making gold cheaper for foreign buyers and boosting demand. The same geopolitical tensions hurting the dollar are driving investors to gold. As confidence in the dollar wavers, gold becomes the go-to alternative. This creates a feedback loop: weaker dollar, higher gold, more demand. The rally isn't just about fear, it's about shifting trust away from the world's leading currency. Gold is seizing the moment as the dollar stumbles. Gold's rally is lifting other metals too. Silver has surged to record highs, driven by both safe haven demand and its industrial uses, Platinum is also breaking records, reflecting a broad flight to hard assets. Even copper, a barometer of economic health, is rising, possibly due to supply fears and inflation bets. The simultaneous surge in precious and industrial metals shows widespread anxiety. Investors are hedging against both geopolitical risk and inflation. Each metal reacts differently, but all reflect the same global unease. Together, their price moves paint a picture of a world bracing for uncertainty. Record gold prices and global tensions aren't just headlines. They affect us all. A weaker dollar and trade threats can raise prices on everyday goods, from food to electronics. Tariffs act as hidden taxes, fueling inflation and shrinking paychecks. Uncertainty makes businesses cautious, slowing hiring and investment. This can mean fewer jobs and more financial stress for families. Rising gold signals trouble for other investments like retirement accounts. Diversifying with assets like gold can help protect savings in volatile times. Gold's price is a personal economic indicator for everyone. With gold at record highs, the big question is, what's next? If the US and EU resolve their dispute, confidence could return and gold might fall. But if tensions escalate, the flight to safety will intensify, pushing gold even higher. The outcome depends on political choices in Washington and Europe. This episode is a reminder. Global power dynamics are shifting, and volatility may be the new normal. For investors and citizens alike, staying informed is crucial. Gold's surge reflects deeper anxieties about the future. As the world watches, gold remains our clearest signal of global stress and what may lie ahead.